In level 2, I'm going to spend much more time on the Fibonacci tool because when it comes to barriers and trend advancement, it's the most important tool you have. Here in level 1, all that's important is that you're trading a legitimate barrier. While I did mention historic support and resistance and other barriers in level 1, I'd suggest you primarily focus on a Fibonacci retracement level. Always keep in mind that our goal is not to make profit in level 1. Our goal is to practice doing and seeing important elements of trading. You're learning the basics and preparing yourself for high probability trading in level 2. Once you see your trend and that trend begins to pull back, this is where we'll look for our trade. The word pullback is also called retracement. Retracement refers specifically to the Fibonacci retracement tool levels, and a pullback can refer to any reversal of price. In the chart video, I gave you Fibonacci settings of 23.6, 38.2, 50, 61.8, and 76.4. This is what that tool looks like all by itself. We start at the beginning of the trend and then draw it to the end of the trend. This tool is extremely valuable because there are repetitive patterns here too. This tool can help us identify a good barrier. But first you need a trend. When that trend starts to pull back, that's when you can use the Fibonacci retracement tool. From here on out, I'll refer to it as the Fib tool. Once we draw it, I'll refer to it as the Fib. As you can see, if you follow the arrows, price is going sideways and then it begins to trend down. And a downtrend we would want to sell. But we want to sell when price pulls back to a good barrier. The Fib can be one confirmation that we have a good barrier. The Fib is always drawn from left to right. You know it is time to think about drawing a Fib because price begins moving back up. The end point of the Fib is always the high of an uptrend or the low of a downtrend. In the case of this picture, you start the Fib where the trend begins down. All of the rules are very easy to learn except for one. The correct starting point of the Fib is the most difficult part to learn because the new trader must learn to see when momentum begins that creates a new wave. For now, just look for when price begins to make a move to advance the trend. In a short period of time, you'll get the hang of it. I would encourage you to post pictures in the Level 1 forum and get feedback from the community. This is definitely the fastest way to learn. 23.6% and 38.2% are natural profit-taking levels, and 50% and 61.8% are correction levels. 76.4% can be thought of as the place where the trend will make its final stand. The historical pattern is this: 38.2, 50%, 61.8, and 76.4 can be barriers indicating where price will turn. I don't pay attention to the 23.6 barrier as a potential place for a trade. All too often it just moves to 38.2 anyway. So I'd like to see price move back to 38.2% before I even consider a trade. Now you have two things you can look for as a barrier. One, a Fibonacci retracement level, and two, a historic barrier. As I said, you can just focus on the Fibonacci retracement only here in level 1. Let's look at a couple of examples. Notice that I did not start my Fib at either of those two arrows. Why? Well, notice how price is in a bit of a range, and that powerful wave that makes the move up begins at my starting point. That's where momentum for this big move starts. That's where you'll learn to draw the starting point by the time you finish level 2. Now, just practice and don't worry too much about being precise. Now, there's one more thing I need to cover with you. You're going to see me often posting 5-minute charts, and occasionally when the market is really moving fast and strong, you'll see me posting a 1-minute chart. I'm always looking for the intraday trends on the 30-minute charts. Now, intraday describes the movement we see during a single day of trading, usually. But I also use it to describe the sentiment of the market, which can be 3 to 5 days. So I'm reading an intraday 30-minute chart to see which direction the market is moving today, tomorrow, or a period of a few days. Again, when you hear me talk about intraday charts, it could be me talking about as much as 5 days of 30-minute candles. Ultimately, a trend plays out in a cycle. It has a strong push, it has a second push after a pullback, and then a correction. And this is not dependent upon time. It can take 15 minutes or can occur over a course of 3 to 5 days. Usually it will be 3 days or less. Here's what I want to show you. You'll very often see me posting a 5-minute chart. I'm not trading the 5-minute chart per se. What I'm doing is looking to see how price is moving. As you're going to learn in level 2, price waves always make a move in a direction and retrace 38.2% or more. But when I see a retracement of 38.2% or more, I ignore that wave and begin following what I call the new wave. Now, if I arrived to my charts and I saw this 30-minute chart, I might be thinking that price is retracing to 23.6%. But is it? Remember that price trends, pulls back, and makes a second push. Here's what I want you to think about. Price may have already pulled back 38.2% or more during this move down. In other words, the market psychology that's creating this pattern may have already happened and we can't see it. And if the market psychology has already played out, why on earth would I be trading it? So what we need to do is change to a smaller time frame, like 5 minutes, so that we can get a closer look at what price was doing. Right now, all we see are a few 30-minute candles. This is the exact same chart, but I've changed it to 5-minute candles. To this point, I left the fib in the same place, but notice that there's been some retracement on the way down. Now, if I were waiting for price to retrace to 38.2% right now, we would be doing the wrong thing. Let me show you the retracements on the way down and then where our fib should start. As you can see, there's not one but 4 waves. How do we know? Because price moved down and retraced 38.2% or more each time. So our fib should begin on that 4th and last wave, not on the top area where we have it drawn now. Let's take a look at that. As you can see, if we put the fib in the correct place, that's actually following price movement, we see a very nice 38.2 or 50% entry before price makes a nice drop. I know I probably created some questions showing you this, but when you don't have any more of them, then you'll know you've learned how to do it. Once again, be sure to post pictures in the Level 1 forum and allow the community to give you feedback. Again, this is the fastest way to learn. Use these rules for Level 1, and when you get to Level 2, I'm going to go into much more detail about new wave Fibonacci drawing. In the next video, we're going to discuss entry and exit points and what you need to do in Level 1 before you're ready to move to Level 2.